The Obama administration has been talking about higher taxes on the oil and gas industry for the last 2 years, indeed before Mr. Obama actually took office. The justification in their mind is twofold. Number one, the industry earns what they sometimes refer to as obscenely high profits. And number two, we desperately need additional revenue to deal with the huge budget deficit that's been accumulating year after year. So not surprisingly, in the 2011 budget, Mr. Obama and his team are once again proposing tax hikes of various sorts. One of the tax hikes, and the one that concerns me the most, is to eliminate the tax credit for foreign taxes paid. In other words, if you're a domestic U.S.-based oil company, but you have operations abroad, you would no longer be able to get a tax credit for taxes paid to other countries on the income earned in those countries. I believe that would put American oil and gas companies at a serious competitive disadvantage. It would amount to dual taxation because every other country in the world allows for a tax credit or a deduction against foreign taxes paid. So this is just one more instance in which the administration is advocating a policy that, yes, might generate a little additional revenue, but could also do serious harm to the industry, force more businesses to move offshore, reducing the level of employment in the United States and increasing our dependence on imports. That doesn't make sense to me. They will respond by doing less business in the United States and doing more business abroad. We're already seeing evidence of this with the drilling moratorium in the Gulf of Mexico. A number of offshore drilling platforms have left the Gulf of Mexico and gone to other parts of the world, and they're not going to come back. At least they're not going to come back soon. Anything that we do in terms of policy, regulation, executive order that makes it more difficult or increases the cost of doing business in the United States is simply going to shift that business abroad. These are global corporations. When we talk about oil and gas, it's a global market. These resources can be produced in many parts of the world, and we need to keep in mind that both in terms of American companies and in terms of the United States as a whole, we are competing in the global marketplace for fossil fuels, both in terms of production and in terms of sales. I've always found it ironic that a nation like the U.S. that is well endowed, indeed rich with energy sources, is increasingly dependent on imports for our energy supplies. That doesn't need to be the case. We have plenty of oil. We have plenty of natural gas. And yet we constantly enact policies that make it more difficult or more expensive to produce those fossil fuels in the United States. And then we wring our hands and say, oh my goodness, 30 years ago we were importing 40% of our oil. Today we're importing more than 60% of our oil. Let's do something about it. The administration says, oh, we can solve that problem with renewables. And they have been subsidizing solar and wind and other forms of so-called green energy, frankly, at a much higher rate than oil and gas have been subsidized if you put it on a BTU equivalent basis. But the reality is, under the best case scenario for renewables, we're still going to be depending on oil and gas for probably 70 or 80% of our energy needs 25 years from now. So there's a real naivete among the true believers who say we can get all the energy we need from renewables, efficiency, and conservation. Sure, renewables are great, efficiency is great, conservation is great, but we're still going to need more oil, we're still going to need more natural gas to generate electricity, to power our motor vehicles, and for use as an input to the petrochemical industry. So why not develop our domestic resources to their fullest? That's the way you reduce dependence on imports.